All right. Well, first off, thanks everyone for being here. I do appreciate the invitation from Winvesting in MarketFest. Appreciate y'all having me. I know it's been a long day, so thank you guys for sticking it out. I saw the speaker list, and I followed up some of these guys and gals before. I know that you've had some really good information. I know Larry brought some really good information. Really respect his trading a lot at PowerCycle. So I have worked with a lot of these groups before. The information that I caught sounded very good and very consistent. And that's one thing you want to find. You hope to find is consistency amongst successful traders and successful educators in this business. So let's talk about Trade the System and myself a little bit. I will talk about myself in the presentation just so you know where I'm coming from. But Trade the System is a company that I started back, it's been about 7 or 8 years ago. The idea has been around since about 2003. So over 11 years. And what Trade the System is about, everybody thinks it's about some kind of mechanical system you can turn on and just make gobs and gobs of money. And unfortunately, I wish that was my system. But trading is a little bit of an art as well as a science. And what my goal is to educate people on how to trade their system and to create a system around a complete trading plan around your beliefs and your ideas of the marketplace. So what I've done is my education is going to have everything that I teach is going to have 3 components. It's going to have identifying the trend, finding the trigger of the trade, and supervising the trade. And that's what the TTS method is all about. I'm going to talk about one aspect of that trading plan today, and that's trading low-risk tops and bottoms. But before we get into that, let me give you a sense of where I came from, and we all have to put this little disclaimer up, so I'll give you about 10 seconds to read that, and if you need, I can send you the link if you're concerned with the fine print. But I am registered in the state of Virginia, so I do have to abide by certain disclaimers and rules and let you know that some of the trades that I will be showing will be hypothetical and we'll be looking at it from a past tense, although I'm going to, at the end of the presentation, bring up some current charts and discuss some trades from today as well. So that should be long enough to read all of that stuff. And let's get into who I am. The reason I do the first 2 slides here is because trading in itself is not just about buying and selling the market. It's a lifestyle. It is a career choice. It's not just a job that we show up to do. Now we have to treat it like a job, but anyone in this day and age, and this wasn't true back in, I guess, 99 to 2000 when I first started corporate America, not everybody had the information and the technology that we have today. But today I can honestly say there are tools and there are methods that you can sit at home anywhere in pretty much that you have a decent internet connection and make a living doing this. Because if you can do it from South Hill, Virginia, which is where I'm at, it's halfway between Richmond, Virginia and Raleigh, North Carolina. We have to, I get teased a lot because we have to drive about 50 to 55 minutes to the nearest mall. But it's where I grew up. It was where I was born and raised, and I lived in Richmond for about 8.5, 9 years. After I graduated from college, my wife and I got married and went there, and it was okay. I'm just not a big city type person. I like to visit the cities. I go to Las Vegas, New York, San Diego, LA to do talks for the various exchanges, and I enjoy doing that. But you give me 3 to 5 days in a place like that, and I'm ready to come back home. I'm ready to be back in the comforts of the little countryside that I've made my retirement area, I guess is what you say. I graduated from Old Dominion. I was in the IT profession for 9 years, which it's helped me a little bit with the technology that trading, that you have to be into to trade. But a lot of the technology now, it's so far advanced, it's point and click. So you don't even have to be a technology professional anymore to trade. I have been trading full-time since 2005. But like I said, I founded TradeTheSystem.com, and I'm one of the old-timers when it comes to moderating live trading rooms. A lot of people can teach you the theory, but when it comes to application, they're a little hesitant to call out and put their analysis up against real-time market activity, and we do that every day. I've got a partner that is an expert in the grains markets. His name is Pat Barman. He's been trading for about 32 years. So both of us don't have a problem sitting here analyzing live markets, and we're some of the old-timers when it comes to that. A lot of people in the trading profession, they haven't been around for 7 to 10 years as a trading room moderator, but it's something we love teaching, we love sharing, and I hope you get a lot out of today's presentation. And I also manage a private fund with stocks, options, and futures, okay? So let's talk a little bit about before you ever push the button, before you ever push the buy or sell button. And let's talk about why you're even trying to do this profession, okay? There's an old saying that says, when the why is big enough, the how is easy, okay? Just to make money, yeah, it's a reason to trade, but it shouldn't be your only reason to trade, okay? What you need to do is you need to figure out what drives you, what fuels your passion for trading. Is it the analytics? Is it the the competition? Is it, obviously the money is going to be a little component, but for me, it's flexibility. And in order to spend time with these two little guys right here on the beach, or have my wife and I take some vacations whenever we want to, or around her schedule instead of mine, I can trade from anywhere. When I'm on vacation, give me a laptop and a wireless connection, and I'll do a limited amount of trading. I'm not going to trade the size that I do in my office, but I can make enough to keep up with the markets and do okay. But flexibility is the reason that I trade, because there's no other profession that can allow me to go eat lunch with my son when I want to. There's no other profession that can allow me to take a Monday or a Tuesday or a Wednesday off, and if he's out of school, take him hunting or fishing or to the lake or something. And then when this little one came on that's hiding his face, he's the challenge. Okay, now he requires me to have a lot more flexibility than I needed with the first one. Whoever said 2 is just double the work, they lied to you. They definitely lied to me. Two is about quadruple the work, because the second one is definitely more of a handful. So this is why I trade, and I found my why. So what I'm going to ask you to do is just look, regardless of whether you agree with the method that I'm going to teach or you agree with what I'm looking at in the markets, determine why you're here. And if it's just to make money, there are 18 million ways to make money. Make sure this is a passion for you, and it's something that you get up and do not kind of dread coming to work. If you dread coming to work, I'm a firm believer in we only live once. So what I want you to do is I want you to find something that you enjoy doing and make your passion your career. And that's what I did. The flexibility was the driving force. It allows me to do what I want to do. Yes, I enjoy the charts. I enjoy figuring out risk reward. I enjoy figuring out entry signals. I love trying to figure out which way the market's going each day. But now that I've been in the business for 10 plus years, figuring all that out, it's pretty, and I hate to use the word easy, but it's simple, okay? It's not easy, because just knowing what's going to happen and doing what you're supposed to are two different things. That's a big hurdle, even after you've been trading 10 years. But I'm going to show you a method that's going to simplify your decision making. So let's talk about that, and let's get into the nuts and bolts here today, and hopefully why you joined is you want to identify a method where you can trade low risk tops and bottoms, okay? So what is a low risk top or bottom? It's the area that, okay, it may or may not turn, but I can control my risk. The previous presenter talked about R's, your risk and reward, right? And talked about risking 1 and making 5.1 or 6.3 or whatever, just making more than 1 R, okay? So what I want to do is I want to identify turning points in the market where I know I'm wrong quickly and can get out, and if I'm right, it has a good probability of being a top or a bottom. Now, why am I talking about this now? Well, I've been talking about it for about 4.5 years and preaching it, but now is more important than ever, and let's look at why. And it's really because of the increase in volatility over the last, let's call it 6 weeks. And I'm being a little bit gracious there. It's really kind of the last 4 weeks, but we're going to give the market the benefit of the doubt. So the first thing I'm going to introduce you to, and I'm going to teach you some terms that hopefully you've heard of, but if you haven't, then this is going to be a really full session of vocabulary. If you've heard of a lot of these terms, then it'll just be a review and you'll know where I'm coming from and why I put significance on some of these terms. The first term is average true range. And some of the others may have talked about the average movement in the market. You know, there are different things that measure the volatility in the market. The average true range, you've got Bollinger Bands and all sorts of linear regression analysis and all things like that. But the average true range in the Dow, you can see, and this is a Dow chart on the daily chart, you can see it's gone from below 120 to above 274. Now it's come back down. It's still above 240 right now, but it's still significantly high compared to where it was. Now, why is this important? Because if you have a, let's just use round numbers. If you have a 500-point range, it's pretty easy to try to take 40 points a day out of that market. You've got a lot of opportunity. You've got 500 points to squeeze 40 points out of. If you've got, you know, 150 points and you're trying to squeeze 40 points, still doable, still doable. However, it's not as easy because you've got to be a little more precise, okay? Or you have to over leverage yourself. There's two levers there. But let's talk about why the ATR is important. It's because the opportunity for you to make money has increased dramatically in the stock index futures. Okay, it's more than doubled in certain ones. So let's look at exactly what the ATR means. And like I said, the ATR is the average true range. It's the amount of points or ticks or, you know, dollar figures. The ATR measures the number of points that a market moves in a specific day. Does it mean it's only going to go up that many points? No, it's the total movement. So it's plus and minus the previous day's close if you project it out. So if you take 274, like in this example, you can add 274 to the close, and that's an expected move, and you can subtract 274, and that is an additional expected move. That gives you a 500-point range that the market can trade in and still be considered normal movement for that next day. Okay? That's very important. So what we're going to do is we're going to take that ATR and we're going to add it to whatever your trading's point value. Okay? In the Dow, for instance, it's $5 a point. So each point from 16,304 to 16,305, you're looking at $5. And you're going to say, well, that's not too much. But when you look at the range that the Dow can trade in, that equals your daily move. Okay, your daily movement, your daily ability to profit. So let's look at these numbers. The 120, which we had back middle of September, that only offered you about $600 a day in total dollar movement. Some of you are saying, well, shoot, I'll take $600 a day. But let me ask you a question. How many of you, and I'll put myself in this poll, I guess, if you will, how many of you have ever bought the top of the day? Or well, let's do it a different way. How many of you ever have bought the bottom of the day, the very low print of the day? How many of you have ever bought the low print of the day? Anybody? I can raise my hand. I've lucked up, I think in my 10 years, I've lucked up maybe 5 times, you know, buying the absolute low tick of the day. How many of you have ever sold the high print of the day? Has anybody ever sold the high print of the day? And again, I can raise my hand. I've done it maybe 2 to 3 times in my lifetime. What I have never done is I have never bought the low print on the same day that I sold the high print. Okay? I have never, if the market is offering me $600 that day, I have never made in one trade $600. If the market's offering me $470, I've never made $470 on that one trade. I've never been smart enough to buy the bottom of the day and sell the top of the day. Okay? It's impossible. So when I tell you there's $600 in movement, that doesn't mean that you can make $600 a day. What I like to say is I'm going to miss the first part, I'm going to miss the last part, but I'm going to catch the meat in the middle. Well, the meat in the middle, if I miss the first third and I miss the last third, that only leaves me $200 to make that day. So if I'm a Dow trader, I've got to come to the conclusion that, okay, on average, I'm probably going to be able to take $200 a day out of this market. Well, enter the ATR and the increase in volatility. Now, what does the Dow offer me? At an ATR of 274, now I've got a $1,370 move in a day, okay? Huge difference because, like I said, I'm going to miss the first part, I'm going to miss the second part, but I'm going to catch the meat in the middle. Well, look at how much meat is in the middle of a daily move on the Dow. And the cool thing about trading the indexes right now is they're covering that range sometimes twice a day. Sometimes they're running up 274 points and they're running back down 274 points. So you need a method, you need a trading plan that can take advantage of this, okay? Not only the Dow, the S&P has gone from a 16 ATR, that's a 16-point move, to about a 30, right now it's about 34, 35 points. But that's $800 in profit potential to $1,800, almost $2,000 a day. How many of you, if your goal is to make $50 a day, how many of you think you can make it out of a $2,000 move? Do you think if I give you a $2,000 window, can you pick up 1 point in the S&P? I think I can. I'm not 100% sure, but I'm pretty sure I've got a better chance at picking up a 1 to 2 point move in the S&P right now than I used to when it was trading, you know, at a 16 ATR, and we were still able to do it back then, but it was not as easy. And the reason is that when the volatility doubles, our profit potential doubles. Now, does our risk double? Very important concept here. No, it doesn't, because we are pinpointing turning points in the market. So I'm taking the exact same amount of risk, and all I have to do is hold longer because my targets are bigger. And why is that? It's because the structure of the chart, which I'm going to get into and show you why my risk hasn't increased, it's because the structure of the chart, I'm still looking for turning points, okay? So real quick, NASDAQ's gone from 30 to 84. It's more than doubled, almost tripled. Russell, 14 to 27, has almost doubled. And the Dow, I've already told you, 120 to 274. So that's the reason it's important to understand. If you've struggled in the indexes before, you're not alone. But right now, the indexes are trading like beans, like crude oil, like gold. They're offering you a whole lot of range. Now, I don't know how to trade crude oil and not take a little bit more risk just because it's a violent contract. I don't know how to trade gold in a less risky way because gold likes to flutter around a little bit. I have to use big stops in gold. I have to use anywhere from 3 to 6 points in gold. But in the indexes, I can use a $100 stop in the Dow with no problem, no questions asked. I can use about a $120 to $150 stop in the Russell, and I've still got that profit potential to catch the meat of the move, which gives you a very, very, very comfortable way to come in here, get your points, be done by lunchtime, and get the heck away from the markets and go do what you enjoy, that flexibility that I talked about. So in order to identify a couple of these tops and bottoms, we have to go over a little bit of market structure. So here's the theory and the education, and then we'll talk about the application. So the first thing we're going to start with is a simple price pivot, okay? This you should be able to get in about 5 seconds, so if somebody wants to time me, they can start right now. All you're looking for is an opposite colored candle, and then that's it. That gives you a simple price pivot. There's nothing to it. If you're looking at a bar chart, all you're doing is looking for a higher close or a lower close if the previous bar was up, okay? That's what comprises a simple price pivot. Why is this important? Because we're going to use this structure to trigger, number one, our risk, number two, our entry, and number three, we're going to use it to identify our potential exits as well, okay? This simple price pivot is the foundation for identifying your tops and bottoms. It is your very first clue that there is a potential bottom in place. And notice I didn't put a time frame on this chart. I could care less if this is a 5-minute chart, a daily chart, a 3-tick chart, a 100 volume chart. I don't care what it is. All I care about is that if you got a downtrend, that first green bar is going to catch my attention. Okay? Now the cool thing about the indexes is you have a little bit more of an advantage. You have market internals, the trend, the ticks, the volume spread, other things to kind of clue you in as to when to look for these. Because if you looked for every one of these, it would drive you nuts. And I'm not here to tell you that every single one of these is very, very important. But in the context of spotting tops and bottoms, this is the simplest concept that is probably the most powerful. So let's build on it a little bit. Let's build on the simple price pivot and introduce a confirmed pivot. Now, this has one additional criteria. The additional criteria is where the market closes, okay? Where that green candle in a downtrend closes. And if you've got a cancellation here, what you do is you got a red bar and a green bar. So the red bar cancels the green bar. You ignore both of those, and you're concerned with the previous bar's high. Okay, and this is in a downtrend. All of these have evil twins. They have uptrends, and you just reverse the color. So if you had an uptrend, obviously the candles on the left are going to be green, and the candles on the right would be red, and you would have a pivot high instead of a pivot low. Okay, so what we're concerned with is right here. Okay, and I think I've got drawing. Yeah, I'm in my comfort zone here. I've got go-to training or go-to webinar, so I know I have drawing tools. And that is a bad color, Michael. So let's get us a decent pen color here, something that we can see. And right here is where we're concerned with, because right here is the key to getting that low-risk trade or that low-risk top and bottom. So what we're looking for is as the market's coming down, we get this bar is your pivot low because that's the lowest point in the chart. This bar is your simple price pivot, right? Your simple price pivot. They cancel each other. So we're going to look towards this bar, and this bar has a name. If you want the name, it's called the initiating bar. This is the bar that initiates the trade. But you don't have to be concerned with that because I really don't get caught up in the names. I just care when this bar closes. When this bar closes, we have a price point that we can evaluate, okay? What are we going to evaluate? That's coming up a little bit later. But what we need is we need price to have fallen, and we need this structure. Once this breaks, you have a better than 60% chance of price continuing up, okay? Now, 60-40 may not mean a lot, but if I've got this defined risk right here, and that's a terrible, let's see if we can do that again. If I have defined my risk to this level, this is my risk, that's a little better, then I can spot these tops, and depending on where price came from, I may target the midpoint on the fib levels, the high of the day, a previous pivot high, but I know my reward, and I know if this trade is worth taking, right? If my next line of resistance is right there, do I really want a 1 to a half risk reward? No, it's probably not a good trade. That's probably not a low risk top or bottom. If this is 120 points away, then I've probably got a very good risk reward ratio coming up, right? So let's move on and continue with our trading plan and see if we can add to this and make a complete plan for you. This is a complete price pivot, confirmed price pivot, okay? What I want you to do is I want you to look for a series of these in the chart. Now, I've told you need to come from the downside here, and let me get the pen so I can show this to you. So price is probably came from up here somewhere, and it's coming down. What did I tell you the first clue is? The simple price pivot, right? So we can evaluate this low, and we can evaluate this low. And that's going to be very important after I show you one more thing. But that's what we're looking for. We're in a downtrend, and we're looking for these two bars. It's probably not going to give you a confirmed pivot, but this pivot right here is going to tell you that the odds are we're going up. This is a bottom, and some people refer to them as double bottoms. A lot of times you will see them form as W's. I love M's and W's. They are very, very powerful patterns, candlestick patterns or chart patterns. And the reason why is they make a constructive bottom that sucks a lot of people in. What are a lot of people told to do? And actually, it's a good strategy if used in the right context, but what are a lot of people programmed to do? When you get to the low of this candle, after you've consolidated, you take the breakout, right? And I think the previous presenter, which I don't have a problem with it in the stock market, but in index futures trading, it's probably, I'm not going to say it's the best strategy in the world. If you're trading gold, wonderful strategy. Absolute, wonderful strategy. But if you're looking at the indexes, these patterns are designed to suck people in, okay? They're designed to suck people in, short, short, short. And then what do? A market moves because when the least amount of people can participate in it. So it's sucking people into the short side, and it's like, oh, got nobody else to short the market, and it goes zooming up, okay? Very, very powerful patterns. And as soon as you not only get this closed, but break this previous structure, you've caught a lot of people. And where do people place their stops? Well, if the consolidation was here, their stop's going to be right here. Or maybe they came right here, And then what you do is you start trickling some stops. And then next thing you know, you got a short covering rally on your hands. Same way, like I said, you can invert this. You've got the M pattern. As soon as you get sucked in, the people who bought right here or bought right here like to place their stops right here. And then you fizzle on down to the previous, the previous W pattern, right? And it's just a circle of life that just never seems to end in the stock market. You go from W to M to, a big long line here that'll create you a W, and you just keep on going back and forth, back and forth. Well, this is a way to spot those tops and bottoms of the market. So let's put one more thing into play here, and it's how we're going to evaluate these two lows. And like I said, don't care what time frame it is. It depends on your amount of risk that you want to have and the time frame that you're looking for in the trade. The patterns are prevalent on anywhere down to like a 50 or an 89 tick chart for the stock indexes. But let's introduce one more concept. Well, actually, I already did this with the crayon. Here's a visual representation of M's turned into W's. So you've got a downtrend here. You've got a pivot point. You break the support level. So what do? You run a little bit, and if it's hard to see, I know, and that's why I like to do it with the crayon instead of with the price, because if you haven't had any practice with this, once you've broken this, you can see that if I follow price down and back up, what do I have? I've got a W, right? And I've got a W that goes to, like I talked about, an M pattern, and then it goes, and you'll get a retest every now and then, but you've got your W right here, you've got your M right here, and then it goes to another W. Now, this point and this point, do you think there's something to these 2 points right here? Yes, there is. There's a difference between this low and that low, and this low and this low, and we're going to get to that in just a second. But you can see how the market really reacts to previous simple and complete price pivots. Once broken, it becomes resistance. Once you've hit it and tested it, you've always heard the first test is the fade. So when you come down to a first pivot level, that's the one to take the retracement. The second time you come down there, you got less probabilities. And if you come down there a third time, you go with. You don't fade that third test because it's probably going to break through. Okay? And I know I'm throwing a lot at you, but really the pattern is simple. I just want to give you as much context as I can in the short time that I've got here, just to show you how quickly you can develop a complete trading plan. So let's go ahead and introduce the last concept, and then we'll put all of this together in the form of a trading plan. I've got to talk about, the last thing I'm going to talk about is an oscillator. An oscillator, and you can read the technical definition from Investopedia, it's an overbought, oversold indicator. It's an overbought, oversold indicator. It oscillates like a, what is that thing called? The heart machine, the EKG machine. It just oscillates for up and down, up and down. In the trading world, we refer to that as overbought and oversold. Okay, I'm going to show you an example of a couple of oscillators. Some of your most normal or most common oscillators is going to be your CCI. You can see that it has a support and resistance. You get down here, you get oversold, and you get up here and you get overbought. Okay, your MACD, you've got your MACD lines, you've got your the regular settings are 12, 26, 9, and you've got your trending way. You've got whether the indicator, whether this fast moving average is above or below the slow moving average, and it will oscillate from over to under to over to under, so it's going up and down, up and down. Price channel on TradeStation, really cool little indicator. You've got a overbought or oversold area, and you've got an overbought area, and it gets up here to an extreme. Price tends to come off that extreme, goes down to the other extreme. Some of the most common ones are RSI, and you've got overbought, oversold in RSI, and then the stochastic, which is, I like to call it an oscillator on steroids, because this thing will go, if you're on a fast time frame, it will sit here and cycle back and forth like nobody's business. Very quick, but gives you a little bit few false signals as well. So that's what I'm calling an oscillator. And why do I care? Okay, Michael, so we've talked about price pivots, we've talked about the price chart. You've explained to us what an oscillator is. What is the relationship that ties these things together? Well, what ties these things together, as soon as I can erase my crayon here, what ties these together is the relationship of the two when they form a divergence. Okay, divergence by definition is, and the next slide does this, a picture's worth 1,000 words, right? So let's talk about the picture instead of sitting here and reading. If you want to read about it, go to Investopedia. You can get the clinical definition. I'm not a clinical guy. I'm more of an apples, an apples to apples kind of guy. I like to deal with the application of things, not necessarily the theory of things. So bearish divergence, really simple. Price is making new highs, indicators making lower highs. You see that right here. Okay, the indicator's losing strength while price is gaining strength. Now, these are the price pivots that I was just referring to. When you come up here, this is a form of an M. Okay, that's going to be a pivot point and a pivot point that you're going to evaluate the pivot point of the oscillator to the pivot point of the indicator, or the indicator highs and indicator lows. Okay, so when you have these line up, and they don't have to line up bar for bar, but you're going to see in a couple of the price charts, you're going to see the indicator come up, and when it comes back up and price makes a new high, the indicator just does not have the strength. That is a hidden clue that the market is giving you that it's about to top out. Okay? Same thing. I told you it has an evil twin. When price is making lower lows and the indicator all of a sudden loses some steam and it heads back up, that is going to be a hidden clue of a market bottom. Okay? Now, I know some of you or most of you have heard about this and have maybe seen it in one shape or way or form. I'm here to tell you that the divergence that is present at this day and time can be really powerful when it's used in conjunction with the trend, okay? And that's what I'm going to discuss that at the end of the presentation, because it's by far what's making me the most money right now, and it's by far the easiest way to trade in these type of markets, okay? So let's talk about that right now. Whoops, there we go. So the Russell here on a 144 tick chart, you can see that price is making a high, and we see a simple price pivot, right? We also see a complete price pivot. Remember, one cancels the other. You're looking for a close lower than the previous bar. You get that right here, complete price pivot. So let's look at that and line up the indicators. So here's the indicator, the overbought, oversold indicator, right? So what we're doing is The indicator is getting stronger and stronger. Price is getting stronger and stronger. Okay, you get to a topping signal right here. A potential, remember, right here's the heads up, right here's the complete price pivot. So we have price getting higher. Look at the indicator. The indicator's losing steam. Right here, let me get the crayon. Right here at this close, I know my risk, and I know my first potential level of reward. So I've got reward here, and I've got risk here. Does that look like a good trade? It looks at least 2 to 1 to me, right? Maybe 2.5 to 1. Okay, real easy, low risk top is in place. Why? Because the indicator's getting weaker and price was getting stronger. Okay? Now, in a strong uptrend, you will get a bunch of these. So I do have some rules and filters to put on this, okay? I don't want you just going and trading every single thing that, you know, every time you see a divergence pattern, they happen a lot, especially on a 144 tick chart. So you got to put it in a little context, okay? So, what you're looking at here is just one instance on a 144 tick chart. This shows up on 5-minute charts. That's a real powerful. We're going to look at a 1-minute chart of today. It shows up on tick charts, and it works on the NASDAQ, Dow, S&P, crude oil, everything, okay? It works on a lot of markets. You just got to put it in context. So let's talk about that context a little bit, and let's talk about my favorite trading situations in the markets currently. All right? So I use, in the context now, you don't have to have this right here. You don't have to have it. I have shown you how to look for divergence. And if you don't want an indicator that will help you, that's fine. I hope you've enjoyed the education, and I hope you enjoy the setups that go along with it. If you are interested in making this visual for you and you not having to do the work and filling your chart up with a bunch of subgraphs, then I will show you at the end how you can get the ricochet, which I use. I've developed and paid to have it developed. I will show you the ricochet, and I'm also going to give you some training on the ricochet as well in a separate deal. But let's talk about the favorite setups first so that you can use these whether you want the indicator or not. We're going to show you when divergence is present and when the pattern is complete, okay? Scalpers, very important. Scalpers are going to use it to follow the trend, okay? If we are sitting here at an ATR of 270 and we're up 24 on the Dow, why in the world do you want to try to call a top there? You don't. What you want to do is, if we're up 24 and your market internals are strong, you want the market to run a little bit, and then you want it to pull back. When it pulls back, it's going to give you an intra-trend divergence, and that's when you're going to jump long and target some of those key levels, okay? So scalpers are going to use it to follow the trend. Longer-term traders are going to use it to spot reversals. They're going to look at it and make decisions on whether to keep their trades or cut them loose at the tops or extended fib projections or any other technical tool that you're going to use. You're going to use them to spot reversals, okay? And then the other thing that this indicator or this method can do is it can complement other tools. Have you ever sat here, I don't know, how many of you trade pivots? Anybody trade pivots? And I don't care whose pivots they are. They can be, you know, well, I think Woody's got the CCI. There's 8 million guys that sell pivots. Anybody use pivots? There's floor trader pivots. There's, you know, all sorts of pivots. If you use pivots, how do you determine whether you're going to fade that pivot or you're going to let it blow through the pivot and buy the pullback to it? I use divergence to make that decision. If I'm coming into an R5 level and I see a divergence signal, I'm going to counter trend trade that market. It's that simple. If I'm coming into an S1 and we're not trending on the day and I get a divergence signal, I'm going to use the counter trend that signal. Now, if I never get a divergence signal, I'm going to let it blow through the pivot and see if I can find a retest of it. Okay, so it keeps me from kind of getting run over by those parabolic moves that, you have your order sitting right here, price is coming down, and it hits it, and it's supposed to bounce, but it never does. It just keeps on running down. And you're like, man, a monkey could have shorted this market and made more money than I did. Why in the world did the market keep going down? We're down 200 points, and I've went long 5 times and lost on every one of them. You ever been in that? I've done that. I still do it, probably about once a quarter. I will sit there and we'll be down 200 to 300 points in the Dow, and I'll have gone long about 4 or 5 times and sitting there scratching my head. Occasionally the market's going to sneak up and take some money from you. It's not a big deal. What we want to do is we want to manage that money, okay? So let's look at this thing in action here and see, obviously, what we're talking about here. Scalpers are going to try to go with the trend. 144 tick chart. This channel right here is a moving average channel, nothing fancy, just a moving average channel that I have color coded. You get a downtrend. How do I know it's a downtrend? Because the moving averages are going down. How do I know it's a downtrend? Well, where's the high? Where's the lower high? Doesn't that, where's the low? Where's the lower low? There's 8 million ways you can identify the trend. The important thing is you've identified the downtrend. You get a move up, you get a little retracement, and you get a move up. This right here is a divergence trade. You can see it signaled by the red dot. Boom, you go on down. And this indicator was I think this one was the stochastic. So down here, if I had the stochastic here, what the stochastic did was it did like this, okay? And then you got your little crosses here, and the cross was lower. So you had a divergence here, and price got equal or greater high. You got a secondary divergence signal right here. The market came down, paused, made a 1-tick new high in a downtrend. The oscillator kept getting weaker. Another signal, down moves coming. Do I care about this? Do I care about this up move, this bullish divergence? No. Why? Because we're in a downtrend. Okay? Make your plan complete. You cannot take on a 144 tick chart every single divergence you get. Filter it with whichever way the market's trending. Very, very powerful. You've heard the trend is your friend until it ends, right? That is never more the case than trading indexes. Now, if you're at some daily resistance or daily support, yeah, you can maybe, qualify this or come up with a plan to trade this. But for the most part, if you're a scalper, and I'm going to classify a scalper as trading a 144 tick chart, you're going to ignore this signal because you're in a downtrend. What is R5 or S1? They're pivot levels, Kent. They're just pivot levels. Some people have formulas that they apply to the previous price action, the previous day's range, and they come up with predictive levels during the trading day. You have like a daily pivot, then you'll have resistance 1, resistance 2, resistance 3, and then you'll have support 1, support 2, support 3. A lot of people believe that price will kind of rotate and turn at those particular points, their calculations. So that's all I'm referring to as pivot traders there. But you can see that's a scalper's view right there. Here is an instance of a predictive level. You've got an ATR level. I've talked about the ATR a lot, right? Well, this is where the market has run up to some ATR levels. This is 100% ATR, and this is 120% ATR. In this price zone, and again, this is your complete plan. I'm only here talking about, the divergence trades, but I'm throwing you some tidbits that you can use in your complete trading plan. If you want to know more, obviously I'm available after this to expand everything that I've talked about. But when you get here, the market, and you can go back and do this testing, the market 93% of the time is not going to close above 120% of the ATR. Sorry about that, that's the market closing. So the market 93% of the time is going to be contained within, and this is stock index futures only, is going to be contained with 120% of the ATR range. Okay, so if I know that we've got a 93% chance of closing below on this particular day 16,352, why in the world do I want to go long up here? I have limited reward. but I get a divergence signal, I can short the market right here, and I can use my stop above here, and I can participate in the move down. Do I want to take this signal? No, I don't. Why? Because we're at an extended range. Okay? This stacks the odds in your favor. It puts the odds in your favor, knowing when to use these. Corn market, this is a scalper's market. 144 tick chart, 1, 2, 3 divergences in a downtrend. This is that consolidation that the previous speaker was talking about. She talked about sneaking in, right? I told you this complements other indicators. Well, okay, so I get a half a position on here, a little more on here, and a little more on here. I've got a full position that I can either add to or do whatever I want to, because the market's pretty much going down. It's telling you 3 different times that it's going down. Now, this happens to be a value chart divergence, so you can see what I'm talking about here. You've got this level, and then you've got the value chart getting weaker as price is getting stronger. It happens not only once, but it happens twice, and then we've all heard the 3rd time's the charm. So right here, and look at that. This is a beautiful, beautiful example because it's going straight equal high. Look at how much lower that value chart is. That is a topping signal, a low-risk top right here. Either one of those 3 signals or all 3 signals, you're going to take out this bottom right here more times than not. Okay? All right. So let's talk about the offer that I'm going to make, and then I will answer any questions that you guys have for as long as they'll let me be here. I'm doing a live trading divergence training, and it's going to be November 25th. It is a 2-hour course. Okay? You can get to the link, www.tradethesystem.com/win, W-I-N. I'm going to show you the complete picture of what I've introduced today, how to determine market direction, when to place the trades, and where to exit. Okay? Since I'm going to have Q&A during this live trading session, I'm limiting it to 30 people. Okay? The first 30 people, and we normally do live trading sessions for anywhere up to $497. This particular 2-hour one is normally $297. We're getting rid of that. We're doing a special of $197, and I'm going to give you the Ricochet indicator package to use. I love indicators. Don't get me wrong. I think they make your life easier, but they are no magic bullet. Okay, the training is what's more important. Understanding when to follow the trend and when to spot the tops, the swing tops and bottoms. That's the important part. Any indicator is worthless if you don't know how to use it. Okay. So the training here is what I'm going to spend time with you on. After the 2-hour training, I'm available through email, or we have a live trading room. So you will have as much support as you need to get comfortable trading this way. The Ricochet that I have developed is for the TTS. That's the price channel. It's just not every indicator package has the price channel. So we have it coded for TradeStation, Ninja. Thinkorswim is ready tomorrow. It's supposed to be ready tomorrow. And then multi-charts, I've got an asterisk here. TradeStation code works on multi-charts. You just have to import it a little differently to the ELD. So if you have any one of these packages, you can get all 5 of these indicators. The price channel, the CCI, the RSI, the MACD, and the stochastic divergence. You're not going to use all of them. You're going to say, oh, well, I kind of like the CCI, so I'm going to use that one. Oh, I like the stochastic, so I'm going to use that one. And you'll figure out, oh, on a swing basis, the MACD works really well on a 5-minute chart. On a 144 tick chart, the CCI or the stochastic works really well. And you'll develop your own trading plan, and I'm going to help you with that trading plan. All of our indicators, all of our training sessions come with unconditional, no questions asked, satisfaction guaranteed. And once again, that link is www.tradethesystem.com/win. And what I'm going to do now is, I think I'm sharing my screen instead of this. So what I'm going to do now is I want to bring in today's chart and just have you look at that so that you can see, whoops, hold on. I thought I was going to bring in today's chart. and then I'm going to take questions. Where is today's chart? There we go. So I need to turn off the pen, I guess, or it's going to keep on shooting me to the thing. There we go. So look at today's chart, and I just want to explain something real quickly. I never know how this thing is going to work day by day, but today I want to show you the analysis this morning because I trade mostly in the morning. This morning we had a huge gap up on the Dow. I knew statistics said this gap was not going to fill. Where the price bounces most of the time is around the 50% level, and you can see that we came down, we consolidated at the 50% level, and we did not get a divergence signal till about and this would be about the 786 level. So now, did that keep me from taking this trade? No, I still took the 50% level. I took a different tool in my toolbox. I didn't use the ricochet right then. But if I would have been a little better and only used ricochet today, you can see I wouldn't have caught the bottom, but we caught the bottom of the move. These green dots right here are where divergence is present. It just never triggered. The blue and the red dots are where it triggers. So you can see we were in a downtrend. Scalpers got a retracement and a continuation of the downtrend. Longer term traders who are looking for bottoms because of the price is more than likely not going to close down here today, just by statistics of where we opened. So the ones that were looking for bottoms got your bottom right here. You got your low and your lower low and the divergence, and I forget what this was. This was CCI divergence, okay? Right up here was MACD divergence, okay? And then you've got all sorts of divergence. MACD, you've got CCI, so you got double divergence right here, and then you're in an uptrend because we've closed and we know that there's a high likelihood the market's going up, so you got your CCI divergence, okay? Now, do you have to have all of these? No, you don't. I'm just showcasing what this indicator did today, okay? Now, I'm willing to take any questions on divergence, or, you know, you can look at whatever I have available to you, you know, as far as questions and answers. But I want to go over one more time what we are doing, and that is a live trading session for $197, the first 30 people, and you get the 5 indicators. And it's not exclusive. If you want TradeStation and Ninja, if you run both of those platforms, you get them for both of the platforms. I doesn't really care. It doesn't matter to me. I want to do what I can to help you be successful. I'm not going to nickel and dime you with platform fees or upgrade fees or anything like that. If you want it for all 3 platforms, you can get it for all 3 platforms. It's just one price of $197. That's my bonus for you spending 2 hours with me and learning about this powerful concept of spotting tops and bottoms. Really enjoyed the presentation. Trading futures is not for me. This does not only trade on futures. This will actually show high volume stocks. Now, you don't want to put it on pharmaceutical stocks or low volume stocks, but it will work on like Apple, Netflix, IBM, Microsoft. I mean, it works on anything with decent volume in the stock arena. I trade stock and options. I love the MACD divergence on like for position trades. I love the MACD divergence on a daily chart. It's a pretty good it's a pretty good deal. Pretty good deal. I will show. Does Pat also call trades in the grains? Yes, Rick. Absolutely, he does. Yep, sure does. Can you explain how to confirm? Okay, yeah, absolutely. We can confirm the complete price pivot. So let's talk about that in a live chart, and we'll zoom in right here. So great question, great question. So right in here, what we're doing is as the price is coming down, you've got a simple price pivot. The complete price pivot does not occur until the close takes out this bar. So this bar right here, you can see the volume that pushed price up caused us to close above that bar. So here's the high volume bar. It closed right on it. The completion was right here. So what you've got to do is you've got to take the 2 bars that make the pivot, cancel those out, and look to this bar. Where this bar opened is your key point. This is the key point in this chart. And when you get this close above that chart, that completes the price pivot. That says, okay, from here to here, is a market structure support. And that's where you want to look to. Anywhere up under here is where you want to look to go long. Or if you like the divergence part, right here is the hidden heads up. When this bar closes, you know you've got divergence presence. And you can take it anticipating the complete price pivot and the move higher. Okay, is it available for Sierra charts? No, not currently. It is not available for Sierra. I'm just writing, I need to write down a couple of these questions, guys, so I don't forget them. All right, so what other, let's see if I missed any. Please show a crude chart. I absolutely will. With your divergence indicator, I see green dots and then the dot that is blue showing the trigger. Do you ever get situations where the blue dot occurs and the market goes lower? Absolutely, absolutely. That's called a stop loss, Brad. That is called a stop loss. You absolutely will get, let's see if we probably have at least one stop loss this, at least one today, I'm sure. Let's see here. Those are pretty good. That's well. So from a technical perspective, it wouldn't hit a 20-point stop, but you can see right here, price went a little bit lower before it bounced. So if you use this as an absolute, and I don't teach using it, I have to say that it's broken right here, but we have a little different exit when this particular situation happens. I use a 20-point stop on the Dow, and if I see this, I decrease my first targets. I try to get out of the trade on a bounce. So, so this was an abnormal day. Well, right here toward the end of the day, I knew this thing wasn't that perfect. It's not that perfect. But here's a great example of a couple of trades that didn't work. Okay, you had the little top here, you had the close here that created the red dot, and then it just blew right up. Now, what's the difference? We're in no man's land and we're in an uptrend. So theoretically, we'd be ignoring these signals. But no, it is not a perfect indicator. It's not going to be 100%. There are times where it's going to give you a signal, and it's going to be a good signal, and it's just not going to work. I wish I could filter those out for you, but I mean that's part of trading. I don't know anybody. I don't know anybody that can filter all those out and be 100% correct. All right. So what else do we have? Crude oil. Let's see some crude oil today. Where's my crude chart? I think I've got a workspace here with crude oil in it right here. Let's find crude right here, 144 tick chart. And 144 tick chart is my chart of choice. You can see if you had it in an uptrend and you were positive on the day, you had a big divergence right here. That's the value chart divergence. You had a couple of other signals here that on the value chart. You also had some CCI divergences and some price channel divergences. But if you're looking strictly from a scalping standpoint, and crude was a little volatile today because we had a petroleum status report, but you can see this down move. You had a defined downtrend. You had 1, 2, 3 opportunities to get short. The best one coming at about 78.83. The others coming around 78.40, and it traded all the way down to about 77.60. So that was good for about 80 cents or $800, about $800. Heating, I don't even trade heating oil, Chris, but I'll be more than happy. I'm not sure the volume on heating oil, but we can, hey, I'm up for anything here. We'll see what happens with heating oil. Okay, so we're in an uptrend. It never pulled back enough to give you any signals that you would take unless you had it defined here. Blew through the resistance here, and then all those would be false signals unless you're outside of the area. Now, what I am noticing is you're probably going to have to drop down on heating oil because it is a lower volume contract. So here's a 144 tick chart, and I'm filling up the day with it. Normally, I don't see that much data on a 144 tick chart, so you might have to adjust the time frame down. Does it have audio alerts? I believe there's audio alerts in there. Yes, I don't use them because they drive me nuts. Yahoo, that's a high volume stock. YHOO. Whoops, wrong workspace. Yahoo. And whoops, I've got it on a 144. This chart's not going to look very good, I don't think, because it's going to be on a 144 tick. You don't want to trade that on a 144 tick. Although there's a nice little sell signal. So we can format the symbol. And just don't forget, if you're interested in that training session, it's www.tradethesystem.com/win. And we want to put it on a minute chart. 10-minute chart was the request. So that's going to be a little slow for my, whoa, what is going on there? Oh, I don't have any history. I don't have enough history loaded here. So you can see the uptrend, and you can see it's pretty much grinded up without many pullbacks. There's been no divergence signals on the pullback. The reason this doesn't qualify is because it's across multiple days. So you had a gap down. So a 10-minute chart's going to be a little slow to be traded on this. You're going to want a little more bars on your chart. Okay? So we can bring it down to, you know, a volume chart or something like that, and it'll work fine. But you can see that the concepts are still there. I just don't have a lot of history loaded on my 10-minute. You can see right here on the 10-minute chart, some kind of resistance was run into. We had a divergence trade today, and the market sold off for about, what, $1.20, $1.40, somewhere in that neighborhood on Yahoo today. So it's been a nice little exit there. All right. Well, 4:16, I actually finished up 15 minutes early, so I can stay around for a couple of questions. But that's my presentation. I hope you guys got a little tool you can put in your toolbox. Divergence is a very powerful concept, and I know it's helped my trading tremendously, and I've been using it for quite a while. The indicator's just there. That's, like I said, that's not the important thing. That's the bonus item. That's the nice to have. Keeps you from having to have 5 different subgraphs on your chart. Saves a lot of space. You can look at the most important things. You can look at price and volume and not have to worry about all those indicators. It puts it right on the chart for you. So as far as that goes, if there's any other questions, I'll be more than happy to answer them. Otherwise, that's, let's see, Dan, are you still here?
I am.
Can we look at the ES 5-minute? And where's this is volume down here. I've got it on the subgraph. That's why I don't like to fill my charts up with subgraph. I've got one more question, Dan, and I'll turn it back over to you, and we'll be good. It's okay if I finish, I think, 15 minutes early, I hope. Format symbol, we're going to look at the ES. That's the E-mini, the S&P E-mini. And there we go. We're going to do at ES. And we're going to look at a 5-minute chart. And I'm assuming you want 24 hours, not just the day session. So right here you can see divergence today kind of fell off a little bit. Divergence up here, triple divergence at the top right before the big down move. And then when we got here this morning, when the volume came in, exact same thing on the 1-minute chart in the Dow. You had that gap fill. It looked like it was going to a gap fill. We had a divergence signal right here at the low. Now, you wouldn't have caught the low. You'd have been a couple of points off the low, but then we trended up higher, and now you're getting a little bit of resistance right here at this last little high we made this evening. So in the overnight activity, I would look for it to trickle down a little bit. It will be a low volume move, but right now you've got a little bit of resistance right here coming in at 2019 on the ES. All right, at least 1 million shares per day. That's a good volume. The more the merrier. You know, 2 million is better than 1 million. When does divergence print? The green dots start printing when you take out this low. If the conditions are met, the green dots will start printing. The blue dot will trigger on the first higher close, the simple price pivot. The simple price pivot. Is it at the close of that red bar? No, it's at the close of this green bar. That's why I said you're not going to catch the bottom. You're going to catch a couple of ticks off the bottom. And depending on the chart you're on, it's going to be the first 5-minute close higher. It's going to show you the green dots on these 2 red bars. It's going to say divergence is present. So, and here's I'm going to give you I'm going to give you part of the training of the 2-hour course. What I look for is 5-minute divergence, the green dots, and I will drill down to a 144 tick chart and take any divergence to the upside. So that's one of the setups that I teach in the course. is looking, and I just gave that to you for free. So if you keep me here talking, I can probably give away the whole course, but hopefully Dan will cut me off in 15 minutes either way. No, I'm just messing. That is a tidbit that I do give in the course, though. It is well worth the $197, and it's risk-free, because if you don't feel like you got $197 worth of value, you just call up my office and we refund your money, no questions asked. Would you have shorted that? Would I have shorted this triple top? No, because it was pre-market. I would not have shorted it. How successful is the TTS and this strategy? Oh, depending on, that's a tough question there, Roxy, and I'm not skating around it. If you took every divergence signal, it's not going to be profitable at all. If you filter it, you're going to be able to not necessarily win 90% of the time, but your losers are going to be a whole lot less than your winners. And I can make anywhere, I can make a few $100s a day just using this signal, and I'll show that during the 2-hour training. The last 2-hour training we did, I think we made anywhere from $150 to $300 in 3 markets, and then we lost $50 in 1 market, I think. So how do we know the best divergence signals? I'm going to teach you in the class. I'm going to teach you the filters I use. I'm going to teach them to you. About the red dot. I think I've caught up with the questions. Can we get any? No, the indicator, the toss indicator is the only one that you'll have to wait on. That one will be ready tomorrow. Toss changed their compliance for third-party vendors, and so we had to recode the ricochet, and I think that's being delivered tomorrow with a bunch of tutorials on how to set it up on toss. So it'll be tomorrow or by the end of the week. You'll have it before the training class. The other indicators, you will have to send me like your TradeStation ID, and I will send you the link within probably about 12 hours if you get it to me pretty quick. So is that a sell signal on the right? This right here, yes. Other than the fact that you're out of time for today, you're going into the low volume. But I mean, if you're an overnight trader, you could potentially take that as a short. Ninja's ready now. Yeah, all you do is give me your machine ID, and you will get the email. You'll get an email sent to you. All right. Well, good deal, guys. I don't care how many computers you put it on, Bill. It doesn't matter to me. You can put it on 5 computers as long as your machine ID matches. So you can put it on a desktop, a laptop, you know, whatever you want to. Like I said, I'm more about teaching you what to do. I'm not, you know, here to sell you 5 different versions of one indicator. I like to see people succeed in the markets. I like to try to help them out. I don't try to beat you up over the indicator prices. You can install it on as many platforms as you want, as long as the machine ID. I mean, you and your neighborhood block party can install it. It's going to be tied down to your machine ID. But as long as your machine ID can be opened on that computer, you'll have access to it. You can install it on as many as you want to. And you get the version for TradeStation. It's all in one link. You get to pick TradeStation, you know, Ninja, whatever. All right, good job, guys. Hey, I thank you for your time. Like I said, this is a time away from what your passion is. It's a time away from my family. So I take my training time very seriously, and I know that, you know, you guys take your education time seriously. Otherwise, you wouldn't be here after, I think this thing started, you know, quite a few hours ago. So you've listened to a lot of people. I hope you've gotten some really good information, and I wish you the best of luck in your trading career. Look forward to seeing those of you on November 25th, and if you need me in the meantime, it's michael@tradethesystem.com. I'm available by email, and would love to have you as part of our trading room if you so desire. If you need some help during the intraday call in the markets, you can call my office or email me, and I can send you some links for that as well. But the offer today, one more time, is the Reversals Trading Blueprints course, $197, first 30 people. You can sign up for that at www.tradethesystem.com/win, and you will get the bonus indicator, ricochet indicator package. It's emailed, or the link to download that will be emailed to you really, really quickly. Thank you. I've enjoyed my time here. I would like to thank Win Investing and MarketFest. I definitely appreciate your November event here, and definitely with the class of people that you had here, I know that everybody enjoyed their day and learned a tremendous amount. So the class is November the 25th, 11/25, November 25th from 9:30 to 11:30. Thank you, Dan. Thank you, guys, and I appreciate your time, and that's all I have for today. I'm going to turn it back over to Dan now.